PantheonAI presents Tesla stumbles in Europe, oil rebounds, Buffett's castle test. Welcome to the PAI Morning Briefing.
And good morning, everyone. I'm your co-host, joining you from PantheonAI today, May 6th, 2025.
It's a fine day, and we're really thrilled to have you with us as we dive into the market insights, trends, and news that aren't just shaping the trading floors, but honestly, our whole global economic landscape.
Absolutely. So grab your coffee, settle in, and let's just unpack what's really going on in the world of finance right now.
Let's start with a quick market overview. Looking at the U.S. indexes as we kick off the day, they're showing some modest movements.
Right. The S&P 500, for instance, is trading just above 5620, specifically 5,620.4. It's inched up, by roughly 0.25%.
Okay, and over at the Dow Jones Industrial Average, we're seeing a price around 41,029.6 with a gentle gain of 0.07%.
The Nasdaq, though, is kind of living up to its tech reputation, isn't it? It's standing at approximately 17,716.6 with an increase of about 0.53%.
Yeah, definitely showing that tech voltage, but there is a slight drag on the smaller companies, the Russell 2000. It's down by roughly 0.09%. Sitting around 1,982.8.
So, mixed picture there, but overall, slightly positive for the big guys.
Exactly. Now, over in the digital currency corner, Bitcoin, the flagship one, is trading around $94,483.
Wow, still up there. But it is down slightly today, isn't it? Nearly 0.27%.
Yeah, just a bit of a dip. Ethereum seems to be in a bit tougher shape, sliding roughly 2.47% to a price of about $1,775.
That's quite a move down for Ethereum. So some slight losses in the crypto sector, which is interesting when you compare it to the modest gains we're seeing in the broader equity markets today.
It really is. It highlights that divergence, doesn't it? Now let's take a deeper dive into some major market trends that have been grabbing headlines. One story that really stands out is the shifting narrative in the oil market.
Yes, this Diamondback story you mentioned. It seems almost counterintuitive.
It does. Despite OPEC Plus adding barrels over the weekend, and persistent leaks suggesting those increases might continue until Kazakhstan and Iraq sort out their overproduction repayment pledges, oil prices actually managed to rebound.
So they went COP? Even with more supply coming online, potentially?
Exactly. Oil is now up by about $2, sitting around 79.13 a barrel.
That's surprising, given the heavy-handed decisions we often see out of those cartel meetings. What do you think is driving that rebound?
Well, it could be signaling that market participants are starting to expect less long-term pressure from oversupply, or maybe they're just taking advantage of some short-term technical support.
As someone who's been in this business a while, sometimes the market just behaves like that unpredictable friend who never tells you what they're really thinking until it's too late.
That's a perfect analogy. It really does. Switching gears to equities, there's been quite a buzz around 4 stocks investors are keeping an eye on for today, Tuesday.
Okay, which ones are those?
Advanced Micro Devices, Supermicro Computer, DoorDash, and Marriott International. Each of them has been making waves recently.
Right. AMD's latest chip designs have been drawing significant enthusiasm, haven't they? And their competitive position in semiconductors is still strong?
Definitely. And Supermicro Computer has been proving there's plenty of innovation happening in the tech stacking arena. While DoorDash and Marriott, they're facing their own sets of challenges and opportunities.
Yeah, DoorDash has been a huge player in reshaping food delivery, obviously. And Marriott is working hard to regain its footing in a market that's still kind of reeling from the post-pandemic era.
It's a really diverse mix, and each stock has its own story that could potentially challenge your investment thesis in different ways.
Absolutely. Now, another significant story making headlines today revolves around Tesla.
Yes. The beloved automaker is facing a tough market battle, particularly in Europe.
It's puzzling, isn't it? Even after their strategic shift towards pushing the Model Y, Tesla sales in key European markets like Germany and the UK have continued to tumble.
It really is a puzzle, especially given Tesla's reputation for innovation and rapid expansion. It kind of reminds me of that adage, the road to success is always under construction.
True, and in Tesla's case, it might just be a more winding path than we initially anticipated.
Let's not forget the drama brewing in the tech retail space, where Amazon is grappling with a dilemma.
Oh, the Deliveroo situation? DoorDash's takeover bid, valued at about $3.9 billion.
Exactly. Amazon, already a juggernaut in e-commerce, now has to decide whether to support this move or stand aside. It's a high-stakes decision, isn't it?
Reflective of the constant evolution of corporate strategies in a rapidly changing market. It'll be fascinating to see how they play that.
Definitely. Another key headline from our news roundup highlights that the trade deficit hit a record in March.
Ah, yes. Companies reportedly rushing to import goods ahead of impending tariffs. That sounds like a perfect storm.
It does. It created this mix of supply chain adjustments and short-term economic imbalances. One economist even noted that sooner or later we might see imports dropping like a stone.
Wow, that scenario could have deeply disruptive effects on sectors and labor markets dependent on trade. It's a big reminder that geopolitics and trade policies really inject uncertainty into our markets.
Absolutely. Now, in what might be one of the more intriguing and personal takes on investing, Warren Buffett has shared his thoughts on what makes a good business.
The legendary investor, hinting at his impending retirement from Berkshire Hathaway, right?
Yes. And he compared a great business to a castle, something grand and unassailable. That perspective is just invaluable for trying to cut through the noise.
It is. Identifying companies built to endure through turbulent times. His approach, leaning on fundamentals rather than market hysteria, feels as relevant today as ever.
It really does. Shifting to the global front, another major development in the energy sector involves ADNOC.
They're set to gain unconditional approval from the EU for their antitrust review, related to the Covestro deal, right?
That's the one, highlighted by Reuters. This move not only reassures investors about the stability of cross-border M&A, but also signals that European regulators, often seen as the strictest, are willing to embrace such transformative deals under the right circumstances.
That's a significant signal for global M&A activity, for sure. Meanwhile, Tidewater Midstream recently signed a deal, too.
They did, acquiring the north segment of Pembina's Western Pipeline system. This acquisition is poised to reshape dynamics, particularly in the midstream sector.
Reaffirming the importance of infrastructure investments, especially when supply chain assurances are so crucial. If you're into that sector, deals like these are definitely worth watching.
Agreed. And in another twist, we're back to energy, where oil continues to assert its presence. The Diamondback narrative doesn't just show the unpredictable nature of oil prices, but insight into the broader challenges facing the energy market.
As supply and demand shift, even established players have to adapt to conditions that are both politically and economically charged.
It makes you wonder, doesn't it? In a world gradually pivoting towards renewable energy, how long can fossil fuels continue to make headlines like this?
That's the big question, isn't it? Let's shift gears completely for a moment and talk about the toy industry.
Okay, Mattel's CEO, Ynon Kreiz. He made a bold statement about the future of toy manufacturing.
Right. According to him, we're not likely to see toy manufacturing returning to American shores anytime soon, although he did hint price hikes might be on the horizon.
That's an interesting perspective, especially after years of talk about reshoring. It seems for Mattel, the global supply chain is still the most cost-effective option, despite the occasional hiccup.
Yeah, that decision could have broader implications for how consumers and investors view pricing strategies down the road.
Now, let's pivot to a broader sector analysis, focusing on tech, energy, and finance. They're all showing unique trends right now.
Definitely. In tech, we're seeing this ongoing metamorphosis. Players like Tesla and AMD are really setting the pace for innovation.
AMD's pushing boundaries with new chip tech, increased performance without the usual energy trade-offs. And while Tesla's struggling in Europe, their advancements in autonomous driving and battery tech can't be overlooked.
True. But the competitive landscape is fierce. Companies like Supermicrocomputer are bringing new levels of innovation that are challenging the incumbents.
It feels like every day, a new startup idea surfaces that could either revolutionize the market or just become a footnote in tech history, you know?
Totally. Switching to energy, it's equally dynamic. Traditional oil markets, like that Diamondback story shows, are proving that even with geopolitical and regulatory challenges, there's still room for price fluctuations that catch people off guard.
That recent rebound in oil prices, despite increased supply, it really is a testament to the complexity of global energy supply chains.
And ADNOC's developments underscore the significance of strategic partnerships and regulatory clearances. For energy investors, while the push towards renewables is long-term, traditional sources are very much tied to present dynamics.
Couldn't agree more. The finance sector is also going through some interesting transitions. With the trade deficit hitting record highs, there's a palpable sense of caution.
Companies are recalibrating their supply chains to navigate tariff uncertainties, and that realignment is likely to have lingering effects on financial markets.
Plus, the strategies championed by figures like Warren Buffett remind us of the value of strong fundamentals. Traditional value investing, despite its age, still holds significant sway in uncertain times.
Absolutely. When we consider the global implications of all these stories, it's clear we're in an interconnected world. Shifts in one sector cascade into another.
OPEC Plus actions, Europe's regulatory stances with deals like ADNOC's, Amazon's strategies, they're all interlinked in this grand tapestry of global economics.
These moves remind us that whether you're trading stocks, bonds, or digital currencies, keeping an eye on both macroeconomic trends and sector-specific developments is crucial.
To predict what's ahead, you need a bit of educated guesswork. If oil prices keep their unpredictable dance, we could see more volatility in energy stocks, which would ripple into other sectors.
Right, and the debate about reshoring manufacturing, like Mattel's comments, could eventually cause shifts in global trade patterns.
And with record trade deficits, investors might need to brace for a broader recalibration, influencing everything from currency valuations to interest rates.
It's a lot to take in. So what questions are you left with today?
Well, I'm wondering how the disruptions in global oil production and trade will affect emerging markets. Also, will Tesla's European struggles force a wider rethink, or are they just temporary hiccups?
Good questions. And finally, what might the shifts in manufacturing strategies like Mattel highlighted mean for price-sensitive consumer sectors in the long run?
Exactly. Let's explore some expert insights and predictions on some of this. Many pundits are saying we're likely on the brink of a market transition.
In the short term, the modest gains in major indexes suggest cautious optimism. But the volatility in oil and crypto like Ethereum that signals caution should still be our watchword.
That dichotomy, rising equities paired with retreat in certain crypto values, it really suggests underlying uncertainty as investors balance risk and reward.
Industry experts are highlighting that while traditional value investments hold their ground, growth-oriented sectors like tech keep pushing the envelope.
And with innovation accelerating in both, it's getting harder to predict which trends will dominate. The future of autonomous driving and renewable energy, for instance, will be intertwined in ways we don't fully grasp yet.
As experts, we have to remember that while historical data is a reliable compass, sometimes the best insights come from thinking outside the box, kind of like Buffett's castle analogy.
Definitely. Looking at the international stage, global market implications are both exciting and challenging. Europe's stance on mergers, cautious optimism in Asia, innovation from strong tech regions, they all play huge roles.
In emerging markets where frugal innovation is common, you might find pockets of growth that defy conventional cycles. But the interplay between geopolitics, supply chains, and local conditions makes it unpredictable, yet opportunistic.
Our discussion wouldn't be complete without diving a bit deeper into sector specifics. In tech, we're seeing heavy R&D investments, especially in AI and semiconductors.
With companies like AMD leading, the sector is poised for breakthroughs that could redefine how we interact with devices. It's like watching a magic show where the tricks just keep getting more complex.
Haha, exactly. On the energy front, the dynamics between traditional and alternative sources have never been more pronounced. That oil price rebound, despite increasing supply, oil is still a potent force.
Energy companies are straddling that divide, investing in technologies to improve efficiency and reduce emissions. That balancing act is likely to continue.
Investors should watch companies that can successfully navigate both worlds. Within finance, interest rates and trade policies are center stage again.
With the record trade deficit, businesses are under pressure to reassess import strategies that could curb spending and disrupt patterns.
The ongoing recalibration by companies, a reaction to uncertainty and geopolitical pressure, means the financial sector could see significant restructuring. It's like a grand chess game where every move has consequences.
I love that analogy. As we discuss these trends, it's worth thinking about how they impact your own investment strategies. What does a record trade deficit signal for consumer spending?
Right, and might traditional sectors, thought to be stable, be due for a shakeup? And with Bitcoin and Ethereum's volatile dance, how should crypto be approached in a portfolio with traditional assets?
Great questions to ponder. Let's provide some more granular context on a few of those stories. First, the Diamondback oil scenario. It is intriguing.
It really is. Despite supply seemingly outstripping demand, the market surprised us. Even with OPEC Plus additions and uncertainty around Kazakhstan and Iraq, prices bounced back.
That rebound suggests resilience, maybe underlying strength in global demand, hinting at tighter supply near to medium term.
Could be. Next, circling back to international acquisitions. Amazon's dilemma after DoorDash's bid for Deliveroo. That's a corporate thriller.
Totally. Amazon's at a crossroads. Backing that $3.9 billion deal could open new avenues or force them to rethink their model.
It's a clear example of how value and strategic positioning come at a premium. Could be a defining moment for Amazon.
Definitely a case study for future tech M&A, and the Tesla narrative in Europe adds another layer to the auto industry's complexity.
It's perplexing. Despite the aggressive Model Y push, sales decline in Germany and the UK. Are these deep systemic issues? Competition, regulatory hurdles, or just temporary?
And, humorously, is Tesla maybe better at innovating EVs than managing European consumer sentiment? It underscores understanding localized market conditions.
Good point. In traditional investing, Warren Buffett's castle analogy is so resonant. As he gears up for retirement, his focus on strong fundamentals and competitive moats, timeless.
In a market full of distractions, his words are a beacon. The market changes, but investing in solid, well-managed companies stands the test of time. It's almost a personal philosophy.
It is. On trade dynamics, the record deficit in March points to underlying tension economists warned about. Companies rushing imports ahead of tariffs create short-term imbalances,
which can lead to longer-term economic adjustments, impacting supply chains, consumer prices, even political sentiment. A reminder that even with mild equity gains, structural issues need attention.
Absolutely. In Europe's developments, like ADNOC's EU antitrust nod, they show how regulatory environments can both challenge and facilitate growth.
Deals evaluated on a global stage now. The EU's approach shows transformative deals, when done right, can align with stability and competition rules. Europe's a regulator and a facilitator.
Exactly. Let's also touch on tech and energy implications. In tech, every innovation, every launch, potential to reshape industries. Competition between giants and startups drives rapid innovation.
Great for investors who keep their ear to the ground. Energy is that delicate balance, old world and new. Renewable investments are surging, but oil and gas still hold considerable sway.
Investors have to weigh short-term gains from traditional industries against long-term potential in green energy. It's not just choosing one. It's understanding the interplay and timing.
Right. When reflecting on all this, I always ask, what story are these numbers and news items telling us? Are we heading where innovation makes traditional investments irrelevant? Or is there a middle ground?
Those questions keep the conversation dynamic, fueling debates everywhere. Before we wrap up, let's spotlight one more sector analysis, the midstream energy story.
Tidewater Midstream acquiring Pembina's pipeline segment. Classic example of how infrastructure impacts the industry.
Pipeline systems ensure a robust supply chain. This realignment has implications for pricing, efficiency, operational capacity. Investors interested in energy infrastructure should monitor this.
It might signal further consolidation or new leaders emerging in the midstream space. As we wind through these stories, I can't help but throw in a joke or two.
Please do.
They say the market is like a roller coaster. Sometimes you're up, sometimes you're down, and occasionally you lose your lunch, all without ever leaving your chair.
Haha, that's a good one. But in all seriousness, while we appreciate a laugh, these fluctuations remind us that being well-informed and adaptable is the name of the game.
Couldn't agree more. So, to sum things up today, here are some key takeaways.
Major U.S. equity indexes are showing modest gains, but there's that palpable undercurrent of uncertainty from crypto, trade deficits, geopolitical tensions.
The oil story, particularly Diamondback's narrative, points to a market that continues to defy conventional wisdom.
And the tech sector is a battleground for innovation, with companies like AMD and Tesla either redefining strategies or facing tough challenges.
The global implications are clear. Every deal, every regulatory decision, Every shift in trade patterns is interconnected, painting a complex and fascinating picture.
We encourage you to keep an eye on these trends and think about how they might impact your investment choices. How might sustained oil price increases affect consumer spending?
What could Tesla's European woes mean for the broader auto industry? And in a world of relentless innovation, are there any sectors immune to disruptive forces?
Before we sign off, we want to give a special shout out to PantheonAI, your information copilot through these evolving market terrains.
Remember, every question you have is valuable. You can always ask our AI copilot for more insights and guidance.
Learning shouldn't feel like a full-time job, and we're here to make sure market intelligence comes with clarity, depth, and maybe even a touch of humor.
Thank you for spending your morning with us on this journey through the markets. We hope today's discussion gave you plenty of insights and some thought-provoking questions.
As you plan your next moves, whether it's in tech, energy, finance, or any other sector, remember that every insight, every headline, every market movement contributes to the larger puzzle of the global economy.
Until tomorrow, take these insights, keep asking questions, and remember that the path to informed investing is paved with curiosity and constant learning.
We look forward to our next episode, continuing to explore the market's nuances, uncovering stories that explain today, and hint at what's on the horizon.
Once again, this is your host from PantheonAI, reminding you to stay curious, stay informed, and always be ready for the next twist in the ever-fascinating tale of finance.
And remember, learning shouldn't feel like a full-time job.
See you tomorrow, PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.